Hello traders, this is Big Dream FXG. So we're looking at GBPUSD. Though this is not a forecast, but I'm going to show you a trade that I executed last week and I made a massive profit. Just want you to look at the chart so that you will learn what I'm about to teach you. GBPUSD on the monthly time frame, you can see descending channel. This is descending channel and the market has been bearish. It has been making higher highs. It has been making lower highs, lower lows. Now we have this pullback. Here. So this is break of structure here, and this is pullback, lower high. So, and if you look at this pullback, it's already at this resistance, and the market is at the resistance of the channel. Now you see that there's going to be a sell setup. That's what we're going to be looking at. And this is the monthly time frame for 2 consecutive highs. The market has not broken it yet. As you can see, the market has not broken these highs yet, but now it's at the resistance level. And with the conflict that is happening, you know that investors are going to be moving their money from risky assets to safe havens. Sorry guys, so they're going to be moving their money from risky asset to safe haven. Safe haven like the US dollars, gold, bond, silver, Swiss franc, and so on. So now what is bound to happen is that the GBPUSD, the GBP cable, is going to be selling while the dollars is going to be gaining. So now looking at the monthly time frame, we have this break of structure here. This is internal break of structure, and the last break of structure we had here was just a sweep. The candle did not close above it, so this was just like liquidity sweep. And the next month's candle did not break above it, neither did it close below it, but what we had was just candle that, can you see, we did not close below it, neither did we close above it. So what we have was just candle that was just printed inside this bullish candle, a bearish candle printed inside the bullish candle. So there's going to be more of consolidation here. And we had the fair value gap here that price was drawn to, but I'll explain how that happened. So now let's go to our weekly time frame. On our weekly time frame, if you notice, before this new week here, the last week market printed this indecision candle here. It didn't break below this low nor above it. So, and there was this other block here, bullish order block. Look at the expansion candle. That is why I marked this big box here. So I'm going to be taking this box out now, but I hope you know that I marked it because of the other block. And look at the gap that was given. So if an order block does not have this gap, then it is likely invalid. I'm sorry, I'm going to return the block, the rectangle there, because I think it's okay for me to have it there. So now look at the previous candle. Now there's going to be liquidity here because the market has not broken. So this kind of consolidation, and the market will have to go below it before the liquidity, and there's another liquidity here, and there's the monthly fair value gap, which the market is going to be drawn into, and before that this liquidity will help push price to come into the fair value gap. So now what is the next thing is, let's go to our daily time frame. Let's look at, now that is the other block liquidity low here, the last low before the expansion. So it's a liquidity too, and we have this fair value gap on the daily time frame, which we expected price to come into before going down. But since we are looking for an immediate effect, and with the news, the conflict that is going on, the war that is going on now, we know that only immediate effect is what we are looking for. And since we have a liquidity here, another liquidity here, we should look for fair value gap on the 4-hour time frame, where the market will be drawn into to move lower. So if we can find the fair value gap there, then that is the one we will be using. So now we are on our 4-hour time frame. Can you see now on our 4-hour time frame, this is the fair value gap for the higher time frame, and this is the fair value gap for the 4-hour time frame. But one thing you notice is that market came into the fair value gap about 50%. Then the market made a low again. So this low now is kind of like, this is a liquidity, and this is also a liquidity, because we did not break below this low, and we did not also break below this low. So the market made a low and it's going up. So this is a liquidity here, this is a liquidity. So market will come and sweep this liquidity later. But first, before a sell is going to happen, we have to sweep the liquidity to the buy side liquidity before the market starts to sell. So now that we have confirmed the fair value gap and we are looking for the liquidity to be swept, then what happened? So after the liquidity has been swept, if you're looking at your candles, you'd see that we had the market closing above it, and we are looking for sell setup. So of course we're going to be looking for a pattern that will indicate and give us the go ahead to sell. So what we are going to be looking at is for a pattern, and we will look for that pattern on our execution time frame, which is the 15 minutes time frame. Now what do we have? Remember, this is the fair value gap on the 4-hour, and we are looking for a reversal pattern. And you know, a reversal pattern for a sell setup can be double top, triple top, or head and shoulder pattern. Now we have this head and shoulder pattern. Now we're going to be or looking for the neckline, the market to break and close below the neckline, which the market did here. And on the retest of the neckline, that's when we enter the market. So if you don't understand the break and retest, this is what I mean. The market closing below the neckline. Let's look for on our 2-hour time frame. So can you confirm that the market closed below the neckline? And after the market closed below the neckline, we are going to be waiting for a retest, then enter the market. So now going back to our 15 minutes time frame, the market closed below the neckline, and now at the retest we have this bearish candlestick pattern. Now the market gave us a shooting star, and also the market, this is a shooting star, and the next candle is where we executed from, and we executed this market during the London and New York session overlap. And also, yes, after the shooting star, that's where you enter, and the confluence is also on the neckline. Can you see? So that is how we got this setup, and our stop loss goes above the head for a good risk management. So, and our take profit was in around this monthly fair value gap, inside or around it. So because this is the fair value gap that the price was drawn into, it cleared all the liquidities. So, and we had a good 8.36 risk to reward ratio. So this is it. I hope you learned something from this video, and I would always reply to your comments if you have any question. And this is a channel that teaches structure of the market, and do well to share, like, and subscribe to this YouTube channel, and turn on your notification bell for another video.